Every land boom ends the same way. Euphoria, leverage, and blind belief that this time is going to be different. But what if I told you that there's one indicator that's called every single peak for more than 1 century? It's not interest rates, it's not GDP, and it's not inflation. It's something much, much simpler, but far more powerful. What if you could see the warning signs before every single crash? What if you knew exactly when speculation has gone too far, when it's time to sell, and when it's time to buy again? So in this video, first I'll explain what really drives the economic cycle and why so many investors miss the turning point. This will help you understand how the one indicator that I'll talk about actually works. Then I'll show you the one buy and sell indicator that's accurately timed every single peak and every cycle peak for over 100 years. And finally, I'll reveal what it's saying right now and how you can use it to position yourself before the next downturn hits. Now, if you're new here, I'm Ace. I have a bachelor degree in finance, and I built a 400k plus portfolio in my early 20s by following Buffett's value principles and studying long-term economic cycles, especially the 18-year real estate cycle that has shaped every major boom and bust in history. Now, a quick disclaimer. I am not a financial advisor, and everything I say here is only my personal opinion for education and entertainment. Always do your own research before investing. Let's start with the first point. What really drives the economic cycle? Now, everyone always talks about inflation or interest rates or consumer spending as if they are the cause of booms and busts. They are not the cause, they are the effect. Behind every economic cycle, every period of expansion and collapse, there lies one powerful, immovable force called land. Because land isn't just dirt, it's the foundation of all economic activity. Every factory, every home, every business, every shopping center sits on land. And when land values rise, everything tied to it inflates with it. For example, rent, debt, credit, and speculation. Now, especially with land, banks lend with land, and governments tax around it. And when credit expands too far, it's usually because rising land prices made everyone feel richer than they actually were, hence more lending and more borrowing. And that's why every major boom in history from the 1920s to the 2000s has followed the same rhythm. First, debt and credit expands, then speculation floods in, and eventually land prices hit levels no one can afford. And this repeating rhythm, lasting roughly 80 to 20 years, is what we call, or what economists like Fred Harrison, a famous British economist, identify as the land cycle. And it's not random. It's the natural consequence of human behavior around land. Think about it. Everybody you know and every company you know end up using all the money and profits they get from the business and put them back into real estate and land. When times are good, we bid up land values, not because we need more of it, but because we think someone else will pay more later on. And that speculation fuels the borrowing, and borrowing inflates the price. And the moment credit tightens or debt is hard, the whole system unravels. Because the whole economy was built on rising land values, not rising productivity. And that's when the reality is surfaced to everyone. And that's where every economic cycle eventually comes back to land. It's where the boom begins and where the bust will start as well. And one thing people tend to misunderstand is that the real driver of every boom is not demand for homes, it's demand for land as an investment. That's speculation. And once speculation starts driving the market, it's only a matter of time before the bubble actually bursts. We saw it in the 1970s, land-led crash. We saw it in the 1989's savings and loan crisis, and we saw it again in 2007 GFC, and even in the post-pandemic property frenzy. Each time, the same pattern appears again and again. Rising transaction, rising leverage, and a sudden slowdown long before prices peak. And that slowdown in land and real estate transactions, that's the clue that professionals, that the smart investors actually look for. It's the heartbeat of the market. And when it weakens, the top is very, very near. Now, before we move on, if you do want deeper breakdowns like this one, where I show you how the cycles connect to what's happening in the markets right now, make sure you subscribe to my newsletter, link in description and bio. Now let's move on to the second point, the indicator that mark and cause every land cycle peak. Now that we understand that land sits at the heart of every major boom and bust, let's talk about the one indicator that reveals exactly when that boom has gone too far. And this indicator is called the speculation index, and it's one of the most powerful tools ever developed for reading real estate markets, and it's surprising simple for all markets and stock market as well. The speculation index is literally only just the mortgage rate divided by the rental yield. Essentially, it's really just a measure of the cost of renting finance from the bank versus the cost of renting from a landlord. Here's how it works. If the mortgage costs are low compared to the rental yield, it means most of the returns comes from rent rather than from the price growth. In other words, you're not depending on rising property values to make your investment worthwhile. Your income alone already covers most, if not more, of your borrowing costs. That's a sign that the market is stable and not driven by speculation. If mortgage rates are high compared to rental yields, it means your returns depend on property prices rising or continuing to rise rather than the rental income. In that case, investors are betting on future gains just to cover their borrowing costs, a clear sign that the market is becoming more speculative. The higher this ratio rises, the more investors are buying property not because it earns good rental income, but because they believe that prices will keep climbing, a sign that market is running on speculation rather than real incomes. Here's a graph of the speculation index for the past 40 years. Every time this index has hit extreme levels, the cycle has peaked soon after. In 1989, the pattern appeared just before the savings and loan crisis. In 2007 GFC, mortgage rates were low, but the yields had collapsed, a perfect storm of leverage and overconfidence. So from this, we can see that if you buy housing when the speculative index is closer to 1 than 2, you usually make much more money than the reverse. So the buy line and the sell line here are somewhat a guide to a bull or bear run, not only for real estate market, but also for the stock market as well. Now let's move on to point 3, what the index is saying right now and how you can use it to position yourself before the next downturn hits. And right now, the speculative index is flashing a clear warning. The ratio between mortgage rates and rental yields, the core of this matrix, has climbed sharply and fast over the past year. This means the total cost of borrowing is now far higher compared to what you earn from rent. So in simple terms, people are no longer buying property for income, they're buying purely for the hope that prices keep rising, and speculation fuel will run out. Buyers will disappear, credit and debt will tighten, and the market will start correcting, sometimes slowly at first, then all at once. And right now, that's speculation at its peak. And we've seen this movie before. Every time this ratio has moved above the sell line, it's been followed by a major market correction. Think 1970s, the late 1980s, or the 2007 or 2008 crash. And when we're near the sell line, it would be a mid-cycle crash. For example, the internet bubble in 1999. And right now, we are way above the sell line in 2026. And now, if we zoom into today, the index is hovering right around the same levels as previous cycle peaks. And reminder, this aligns perfectly with the broader 18.6-year real estate cycle, which also is nearing its top of 2026 and 2027. And looking forward into the future, as always, even when it's not the most effective way, the central banks will start pumping more money to the economy by reducing the rate to help potentially get the unemployment rate lower and lower, and overall economy even more bullish. And if you've been following me for a while, you would know this does not directly help the middle class who needs it the most, but just make the rich people who owns all the capital get even richer. And you can even see this happening right now. The US has dropped interest rate 4 times in the last 1 year. And because of that, land prices will explode into 2026 and yields will get even lower. And then the wealth effect will kick in. Stocks will go up and rally in sympathy with the rise in real estate. Businesses linked to land, construction, finance, and consumer durables will surge. And with that comes inflation. And once that inflation builds, once the central bank sees that it has unintentionally blown air back into the bubble, it will be forced to act. And rates will have to be raised again. And just like they always do, which will bring our speculative index even higher into the danger zone. So, what does this mean for us investors? If you're over-leveraged, this is your sign to start reducing debt and building liquidity. If you're holding property purely for short-term gains, understand that the easy money phase is over. We're shifting from speculation to preservation. But for long-term investors, this is not the time to panic. It's the time to prepare. Because once the speculation phase burns out, it resets the entire land cycle. And those who have cash ready, who understand history and acts on data, are the ones who get to buy premium assets when everyone else is forced to sell. Now, if you do want to stay ahead of that turn and understand where we really are in the cycle, make sure you subscribe to my newsletter in the description down below and in my bio. I do share deeper insights there every week that don't make it to YouTube. And let me know in the comment section down below, do you think land cycle has already peaked, or do we have one last leg to go before it all unwinds?